Alright guys, today I want to talk about something that I have definitely been guilty of with my trading, and it's probably cost me a lot of money in the past, but it seems like I'm amongst good company there, as I think John Paulson also has suffered from the same thing, and many other very successful traders and investors. And I know definitely a lot of you suffer from the same thing as well, which is why I want to talk about it. And this is all about the contrasting in trading, or the contrast effect. Now I'm sure we've all seen these pictures where they say to us, which of these grey squares is darker? And obviously we know they're just trying to trick us out, so we don't want to fall for that. And we say they're the same shade of grey. But you know, it's because of the colours around them, that contrasting effect, that one of those grey squares looks darker than the other, even though they're exactly the same shade. Or think about it in other areas of your life. Like if you're going to the bar to pick up a potential future partner and you bring along your ugly mate just to make you look better. We all know that trick, don't we? So the same applies with our trading as well in many areas. And the thing I notice most is when it comes to position sizes. So imagine you're building up your account, and obviously if your position size is tied to the size of your account, if you're risking a percentage, having a dynamic position size, as you should, then your position size is increasing as your account increases. But what a lot of people struggle with is that if they go on a losing streak and their account starts reducing, they really struggle to reduce their position size proportionately. Because of the contrasting effect, it feels to them like, you know, having a profitable trade then just isn't worthwhile. They want to have the big profits they were having before. They really struggle to adjust back down. Now, this is extra noticeable with the people that are risking too much with their position sizes. Obviously, if you're risking like 1 to 2% per trade, then if you lose a trade, it's not going to make that much of a difference to your position size overall. But if you're risking 5 to 10% of your account per trade, then if you lose a couple of trades and your account's 80% of the size it was before, then your position sizes are going to be dramatically lower. And people can't make that adjustment back down because the contrasting effect, it makes it really tough to do. You see the same with gamblers, people who go on a winning streak on roulette or something and they've got more money, more chips at their disposal. Then they lose a lot and they decide to go all in and just put all their chips on because they can't accept that they're going to be winning a smaller amount. It's going to be a lower percentage. So instead, they'd rather risk everything and try and get back what they once had. Now, the reason I said that I used to be guilty of this as well is because I also used to use way too big position sizes when I was learning to trade. So of course, when you go on a winning streak, then it's great. Your account's doubling, tripling. But you know, as soon as you start losing, then it's very difficult to adjust back. And I struggled with that. I kept my position sizes high. Of course, this was in the days when I'd really rely on leverage a lot, which doesn't happen anymore. But I had to learn the hard way, and the hard way is from burning out accounts. And I'm sure a lot of you can relate as well. And it's not just with position sizes either. It also affects your ability to close trades when you need to. You start getting more greedy. Because let's say that you make £1,000 on one trade, then if the next trade is at the point where you really should close it, but it's a £50 gain, you might be looking at that saying, well, no, it's not that much. I'd rather hold on and try and get a bit more because the last trade was so big that £50 just doesn't seem like much. But you know what starts to happen then? The trade goes against you and eventually that becomes a loss. Now I'm seeing major similarities right now with the people that first started trading with the cryptocurrency boom, the big hype that there was. Now for them, these big movements that happened in cryptocurrencies, like doubling your account overnight practically, that was normal for them. That's all they've ever known. So now that they have to adjust back to relatively steady state markets, or if they want to shift on to something like forex trading or stocks, the gains that they're seeing are relatively smaller, and for them it's like, well, this is not good. I was making 20% overnight before and now I'm making what, 0.5%? This is ridiculous. You're even seeing it with things like Bitcoin, like I showed you in the video the other day, where the price will go up by 10-20%, and because it's not the same huge rises that we were seeing before, people think that that's nothing. Like, oh, it's tiny movements, it's so slow and boring, but it's not. A 10% gain is absolutely massive for any asset. So it's this contrasting effect. When you compare the rises that have been happening before to what's happening now, people are holding out waiting for these big movements. So what happens when they get that 10% gain? They're holding on waiting for it to be a double bagger, for it to be 170%, but it's not going to happen, and that's how things lead to losses. And also where people have been making huge gains on the rise, then suddenly their account size is smaller because of the drop. And all they want to be doing is betting the farm on the next trade because they want to get back to where they were. So guys, we need to change this mentality. We need to look at things in isolation. Your results last month and the gains or losses you made last month don't affect this month or this trade or the last trade or the next one. They all are in isolation. So if you're getting a relatively small gain on this trade and that's the right thing to do to close at that, don't get influenced by your last one and seeing how big that trade was and think maybe I can get in on the start of a new trend. Just take it for what it is. All right guys, I realized that I missed out some things there and I wanted to add it here at the end. So the first thing is that I know it can be really frustrating if you've been making big gains because you've been using the wrong position size, being too risky, or because you've been trading a really volatile market and made big gains from a one-off situation. It can be difficult to adjust back to reality, which is that it's the smaller percentages and it's the sort of compounding that gets you to big returns in the long term. And you don't need to always be looking for like situations where you can make 100% gains and stuff like that, because it's not realistic. And those are the same sort of opportunities that are likely to burn out your account instead. And the other thing is to appreciate all the money in your account and don't just be looking at the big figures and not care when it's small amounts and think, oh, it's only £30, it's only £20, and start rounding things up. Because all of it's important. You need to instill the mindset that if you look after the pennies, the pounds will look after themselves. And it's like what someone told me, that it doesn't matter how much they earn, they will never walk past the penny that's on the floor and not bother to pick it up, because it's that mindset of everything matters. Like Tesco says, every bit counts. So guys, we're gonna leave that there. If you've got any comments or questions, leave them below. I would love for you to leave a comment, let me know how the contrast effect has affected your trading. Are you fully over it yet, or are you still stuck in that mindset? Let me know in the comment section down below. And if you like this video, hit the thumbs up button. Don't forget to subscribe if you haven't already, and I'll see you in the next video. Thanks for watching. Like if you're going to the bar to go and attract a female companion. Like if you're going to the bar to attract a significant other.
Significant other?
How do I put it without offending people? Like when you're going out to a bar to pick up a potential future partner and you bring along your ugly mate just to make you look better. We all know that trick, don't we?
I'm thinking of Tom.
Just like my mate Tom. That's harsh. All right, we all know the tricks. So